investing in property makes sense. Investing in the right property takes knowledge. Welcome to the Rewarding Property Decisions podcast. I'm Jarrod McCabe, Director of Wakeland Property Advisory. Join me for expert insights into the fundamentals, trends and opportunities to help you create long-term wealth through smart property decisions. Hi everyone, and welcome to episode 64 of the Rewarding Property Decisions podcast. So we're now moving into the heart of the spring market through October, and we're the other side of the school holidays, the AFL Grand Final, and Christmas is certainly on the horizon. So I thought today it'd be worth having a chat with someone who is right in the heart of what's going on at the moment, to give us a bit of an insight into what spring market conditions are looking like, how they're progressing, and what the activity's all about at the moment. So I'm very fortunate today to be joined by Stuart Evans. Stuart's a director of Marshall White in Hawthorn, and is one of Melbourne's leading agents in Boroondara. So Stu, thanks for joining me, mate.
Thanks, Jarrod. Thanks for having me.
So there's a lot that's happened in the Melbourne market over the last probably 4 years with COVID and things going on. How have you found it? What sort of changes have you seen over that period of time?
It's been a very interesting 4 years, I must admit. Something that none of us could have predicted. Probably the biggest changes we've seen is the need and want for more personal space at home.
Yep.
Whether it's a home office or a second living area for the kids to chill out and hang out. I think living at home and being, stuck in your own home has meant you've really analysed what your family's needed.
What you want.
Yeah, more than ever. So swimming pools.
That's exactly what I was going to mention. So swimming pools in Melbourne have always been a luxury, but always the talk has always been you only ever get it because you want it. Don't ever think that you're going to add value to your property by adding them in. And I still think that's the case, but I don't think it's to the same extreme as what it's been in the past.
No, because I think the lifestyle benefits it provides prospective buyers with is now a higher priority.
Yep.
They think, imagine Sunday, nice 20 degree, 25 degree day in Melbourne. With the heating options that the new pools have, they can see themselves having a great day at home.
So previously, again, pools can range in value from $60,000 to $260,000.
Yeah.
But if you throw a round number, $100,000 for it to put something in the past, that probably was lucky to add 30, 40, 50 grand, and it's probably pushing closer to 70 or 80 grand to your property now.
Yeah,
depending
agree.
upon where and what and all that sort of thing.
Yeah, our advice over the last sort of 2 or 3 years has been sort of equal addition. If you spend 100
Cost
on
and
your
value.
landscape, we feel it'll add that back to your value.
Yeah, good.
And in some cases, maybe more if it's done really well and there's a really beautiful sort of outdoor entertaining area.
Yep.
In addition to the pool, it can add some additional value.
Yeah, great. Okay. So you're typically most involved in Boroondara with the family home market, anything from sort of probably $2 million through to 10 mil plus.
Yep.
How have the interest rate movements over the past 18 months impacted that sector?
Fascinatingly, it hasn't impacted us
I thought you'd say that.
too negatively. Definitely, there are some buyers that are a bit more cautious in overspending. That's probably where it had its biggest effect in, competitive auctions. When we really got beyond reserve, buyers, started to bid perhaps a little bit more tentatively, but continued to bid.
Yeah.
And really in the halcyon days of interest rates at 2%, we were seeing post-COVID, as you were experiencing, buyers were bidding $50,000, $100,000, $200,000 above what they perceived their limits were.
Yeah.
Because they just thought, we're going to be able to pay this back pretty easily at 2%.
The interesting thing with Boroondara too, and I've had chats obviously with Richard Wakeland, but also with one of your colleagues, Doug McLaughlin, and who've both been in the industry for a hell of a long time and lived through the high interest rates of the late 80s, early 90s. And they always talk about Boroondara residents as never being impacted as much by interest rate movements because there is so much, I don't want to say old money, but equity in properties.
Yes.
So the fluctuations have a lesser impact, I guess.
Yeah, I think we've benefited, us residents of Boroondara have benefited from such great capital growth, and that's created the equity, which has meant that in times of trouble, we can go back to the bank and refinance and bail ourselves out a little bit. I think also people in Boroondara and Stonington to a certain degree tend to have investment properties that they can sell and that will then pay down that non-tax deductible debt on their residents.
Yep.
which again just eases the pressure. And so I think, financially, those that live in Boroondara perhaps have set themselves up, a little better than other municipalities, purely because they've benefited from capital growth and they've used that equity to invest in other real estate firms.
So looking at this year's spring market, how have you seen it compared to, so we won't go back as far as 2021 when we were coming out of that COVID period and the numbers were just astronomical in terms of supply. And last year was probably a little bit different. But how has it been and how is it looking moving into October from a supply perspective?
It's been really interesting because, we call August, that early start of spring.
Yeah.
We come back from the school holidays, June, July, and that's where we start to talk to vendors about coming onto the market for an early spring sale. So it's really sort of mid-August through to mid-December that we call our spring selling season. But mid-August through to the September school holidays was really tight. Stock levels were low.
Yeah.
And I think that contributed to some really strong outcomes for vendors. Some vendors that went to the market early did benefit from, low supplies, strong demand, and some really good outcomes were achieved for our vendors in that late August, early September period.
But even June, July they're always traditionally low, but from the numbers that I looked at, they were really down on last year. Really down.
Yeah. And what we're seeing now is the school holidays have been and gone. We're actually, a lot of vendors, I think, were waiting to get through to that September, October school holiday period. So we're seeing stock numbers really increase. November 18th, November 25th and December the 2nd are going to be big weekends for Marshall White Group. We'll have in excess of 100 auctions as a group in those 3 weekends in a row. And maybe even the 9th of December will be another Super Saturday that we refer to.
Well, I've spoken to a couple of journalists and they certainly said that August and into September, there was, leading into the grand final, there was sort of 4 or 5 weeks of in excess of 1,000 auctions in a row, which was big numbers. And we talk regularly about, within our office, about whether or not we're going to have a late run, so whether or not we will. And again, not 21 was an aberration, but there was 2,000 plus auctions well into mid-December that year. And I'm not expecting that. But do you think it'll be a bit of a later run this year?
No, I do. I do agree. I think that there's 3 auctionable weekends in December this year. The 2nd, the 9th and the 16th. And I think we'll see auctions right up until the 16th.
Because sometimes we do see where you get basically to the other side of the Melbourne Cup long weekend and it just stops dead.
Really quiet.
And nothing happens.
Yep. Both buyers and vendors sometimes after that Cup weekend just put the queue in the rack and they say, we're exhausted. We'll wait until the new year. But I actually think it'll be different this year. I think we'll see vendors push to get their properties on the market and sold before Christmas so that they can go into the new year sold and ready to buy potentially in February and March next year.
So from a buyer's side of things, and I guess so in order to do that, we look at the clearance rate. That's still been doing quite well.
Healthy.
Earlier in the year, it was to be expected that it was fairly healthy when the supply levels were so low. But now that they're starting to pick up, and again, I still don't think that it's been completely tested yet. I think over the next month to 6 weeks, we'll really see whether or not there's that much depth to the market.
I completely agree.
You and I have spoken a bit about it, and I think we're in a bit of a unique position from a buying side of things in that we don't necessarily see the overall market because we don't typically look at the secondary property. We filter that out and from our client's perspective, and we only look at the good quality stuff. So we tend to see that it's quite active and quite competitive, whereas you sell everything, whether it's high quality, compromised in whatever form. Do you think there's the depth in the buying market from that side at the moment?
It's definitely two-paced. You're right. And when you analyse that premium property that's been freshly renovated within the last 5-6 years and there's nothing for the buyers to do, given the increase in material costs, builder shortage, it's made that style of home more appealing to the family buyers in Boroondara. So that for the last 12 months, that style of property, newly renovated homes have performed incredibly well. And I am now finding we are going through that transition, whereas 6 9 months ago selling a renovator's delight,
Yeah.
so to speak, something that needed substantial work. It was tough to find the right buyer at the right price. Now we're finding materials, the media is talking about materials being more readily available, which is great.
Yep.
Builders, I believe, and chatting to a few local builders, have experienced a few projects that were going to go ahead have now no longer gone ahead because the clientele have said, well, a 30%, 40% increase in the cost to renovate has meant that they've chosen not to renovate and they've perhaps chosen to buy something that's more readily finished that they can move into. So I believe builders have got more options to take on new work now. So just in the last 6 months, we've seen an increase in activity for Renovators Delights.
Okay.
So
that was going to be another one of my questions. I'll get to that in a minute. But the clearance rate hovering in and around the 70% mark is generally what we would consider to be bordering on balanced going into seller's market.
Yeah, that's a good clearance rate, isn't it?
Yeah.
If we can provide our vendors, 7 out of 10 of our vendors, with the opportunity to sell on auction day, I think that's a really good market. And I think where the gap is closing, if we looked at that auction success rate for the top end, beautifully finished, beautifully renovated family home, it was probably more like 80 to 85%.
Yeah.
And your unrenovated, compromised second-tier properties that are on perhaps busier roads, we're probably hovering around 60, 65%. I think that gap is closed a little bit.
Yeah, so it's more of an even spread rather than being balanced out by one extreme to the other. Yeah,
correct. Okay. Yeah.
So coming back to what you mentioned before, with the renovated properties performing well, is that what you're seeing I was going to ask, what are the properties that perhaps aren't performing so well? What are you finding harder to sell at the moment?
I think there have been some vendors that have been really buoyed by the activity in the last 6 to 12 months for beautifully renovated homes. And I think it's a very price-sensitive market this spring.
Yep.
If buyers don't see value in that high-end, beautifully finished home, they really won't engage. And when I say engage, they won't physically walk through the home unless they feel like fair market value is on offer.
Yep.
So what I'm trying to say is if a property is perhaps priced a little too high in comparison to where comparable sales put it, buyers won't tend to compete for those homes. If they've been priced well, they still will compete very hard. And as I said before, the gap's probably closed a little bit. That compromised home is now being looked at because interest rates have gone up. A buyer that was perhaps looking in a side street to spend 2.5. If they can get a really good home that's more renovated than what perhaps they were looking at buying in a side street, but it may be on a secondary road or a cut-through street, they'll look at it now.
Okay.
Because they feel they'll get better value for money. If it means they buy something for 2.5, the street might be slightly compromised, but it's the right house. There's nothing for them to do. They'll pursue it.
So what are you seeing is the most competitive, and taking price out of it, I guess, because most of the time when you find something that's attractively priced, it's going to be competitive.
Sure, yeah.
But just in general market, what are people really sourcing and chasing at the moment?
A period home with a really...
More so than the new builds?
Yeah, a period home with a beautiful facade, but then a gorgeous contemporary architecturally designed extension. They're still the most sought after properties.
And that's pretty classic Boroondara sort of property. So what, what was I going to say? Is there a particular price? Because, I mean, there's period homes in Boroondara and the single front cottages that can be between 1.5 and 2, and there's period homes in Boroondara that can be 10 mil plus.
Yeah.
So what sector is most active at the moment?
I think the 2.5 to 4.5.
Okay.
Because there's a good buyer pool. There's good depth of buyers that have got between 2.5 to 4.5 to spend. And you're buying in Melbourne in the last 15 years, a single fronted terrace, they've seen incredible growth. So they've increased and allowed that potential property owner to upgrade from a $1.5 to $2.5 million single fronted terrace to that $3 to $4 million double front, beautifully renovated terrace.
Big block, all that sort of thing.
Yeah.
Have you seen much of a change in buyer profiles? Has there been a moving from upsizes to downsizes, and I guess in the market that you're in, you don't see as much investment, but is there more overseas investors coming back in that perhaps weren't there for a while?
Yes. Yeah. Last 6 months, that overseas buyer has...
So land bank or
I think
completed home?
In chatting with our great international division, they're telling us that a lot of the buyers that they're working with are wanting to come back and move to Australia.
Okay, yep.
They love the freehold title. They love the 600, 700, 800 square metre size allotments. And the international buyers love the ability to be able to rebuild at any stage. So that style of home for that particular buyer market has definitely increased in the last 6 months.
Okay.
But I think downsizers have also cottoned on to the fact that we're in a fairly stable market.
Yeah.
And if they've had thoughts of a potential move to downsize, they probably feel like now's a good time.
Yeah.
Then they're not going to see the market increase exponentially in the next 2 to 3 years. There's not a lot of media speculation that may happen, but there's also not a lot of media speculation that the market's going to drop by 5, 10, 15%. So I think downsizers feel great comfort that now's a good time to sell down the $4 million, $5 million family home and then move into a smaller scale, more lower maintenance, $2 to $2.5 million home.
Yeah.
Which there's plenty of good product in Boroondara being built now.
Yeah, absolutely, there is. Well, that's probably about all I had today, Stu. I really appreciate you coming in and joining us. I know you're very busy at the moment. You've got a lot on being in the middle of spring, but it's been great having a chat.
It's my pleasure. Thanks for having me.
So thanks everyone for joining us for episode 64 of the Rewarding Property Decisions podcast. As always, please feel free to share the podcast far and wide with friends, family and colleagues. And if you do have any or would like any further information, please feel free to visit our website, wakeland.com.au, or Stu, what's Marshall White's website?
Yeah, marshallwhite.com.au.
Otherwise, we wish you all the best with your property decisions.